When business owners think about the R&D tax credit, most say it's just for big corporations. But in reality, businesses of all sizes can tap into this powerful tax incentive year after year. So, what if I told you there's a way to not only offset taxes, but create a consistent cash flow that funds your next big project? For business owners, VC investors, and their network of startups, this could truly be a game changer. Today, I'm going to break down advanced strategies for qualifying, maximizing, and structuring your R&D claim to make the most out of this tax credit. Plus, I'll share an insider tip on how to avoid the top pitfalls that trip up most business owners. I'm Rich Smith, and I help business owners and investors uncover financial strategies that fuel growth. Today's topic, the R&D tax credit. One of the most effective ways to keep money flowing back into your business or portfolio companies. If you're not claiming this credit, you're not only missing out on cash savings, you could also be leaving valuable resources on the table that could accelerate your growth, not only for you, but also your network. We're diving deep into who qualifies, what expenses count, best practices, and overall how to maximize your credit. Ready to see how to unlock annual savings through the R&D tax credit? Let's jump in. Okay, the R&D tax credit is more than just a tax incentive. It's truly a tool for growth. This credit rewards businesses for creating or improving products, processes, or technologies, which means you're getting a direct financial benefit for reinvesting in your own business. And the best part, you can claim this credit every single year as long as you're innovating. Also, if you're investing in startups, the R&D tax credit could significantly boost their runway, giving them the resources to keep innovating without additional capital raises. That's more retained equity for you and more potential growth for them. So let's talk real numbers, because the financial impact of the R&D tax credit is where it really becomes a no-brainer. Imagine you're a small startup spending $100,000 annually on developing your minimum viable product, MVP. With the R&D tax credit, you could get back $10,000 to $15,000 of that spend. That's real money that you could reinvest in your business and continue to innovate, conduct market research, build out your team, upgrade equipment, even pivot and launch something new. For my venture capital investors, let's be honest, the financial impact of an annual tax credit extends your portfolio companies. By mentoring and encouraging businesses to claim this credit, you're helping to provide more resources to scale faster, hire top talent, and deliver better returns on your investment. It's a win-win for everyone. Oh, and imagine just multiplying this across multiple years. Since this is an annual tax credit, the savings add up year after year, giving businesses a steady stream of extra cash to fuel their growth. The compound impact over time can be truly transformational. Now let's dive deeper into specific industries and uncover how sophisticated applications of the R&D tax credit are driving innovation. Agriculture and farming. Farmers using precision agricultural tools, testing new crop rotations, or developing sustainable irrigation methods can take advantage of the R&D tax credit. These activities both reduce costs while qualifying for significant tax savings. Renewable and sustainable energy. Companies working on renewable energy projects, such as solar panel improvements or wind turbine efficiency, often find the R&D tax credit extremely valuable. These innovations not only save money, but also contribute to a better future. Tech startups. Tech companies working on AI, artificial intelligence, machine learning, or blockchain applications can claim R&D tax credits for the time and effort spent doing everything from refining algorithms, testing functionality, or creating new software solutions. Now, to qualify, business activities need to meet the four-part test. So let's briefly break down each part with a perspective to help you see where you might be leaving value on the table. New or improved business component. This includes developing or improving products, processes, or techniques. Essentially anything that provides value to your business. So if you're making an existing product better, enhancing efficiency, or testing out new systems, you're likely on the right track. Elimination of uncertainty. This is where it gets interesting. Uncertainty doesn't just mean you're not sure if something can be done. It can also mean uncertainty in the method or design. If your team is working out the details on how best to achieve a result, that qualifies. Process of experimentation, testing, prototyping, simulation. Any systematic process to evaluate different options can qualify. Whether you're running software iterations or experimenting with materials, then this trial and error style phrase is exactly what the credit is meant to reward. Technological in nature. This means the work should involve principles of physical or biological sciences, engineering, computer science. So if your project leans on technical or scientific knowledge, then it's a strong candidate. Moving on, let's look at expenses. Knowing what's eligible and maximizing those eligible expenses can make a big difference. Let's start with wages. Any employee directly involved in R&D activities qualifies, but here's where you can optimize. If an employee spends 80% or more of their time on R&D, you can count their entire wage thanks to something called the substantially all rule. This can lead to a much larger claim than simply prorating by hours. Contract research. When using outside experts, you can claim 65% of those expenses, but make sure there's a clear contract in place before the work begins. Not only does that protect your claim, but it also shows you're following best practices for tax compliance. Supplies and prototypes. Materials used in testing, creating prototypes, or developing new systems, they all count. Just keep in mind that general office supplies don't qualify. It's all about those items specifically tied to R&D activities. Computer rentals or leases. Cloud-based expenses, such as servers from AWS or Microsoft, can qualify if they're directly involved in R&D. This is a big win for my tech companies out there because we all know cloud costs can quickly add up. Here's a pro tip. Be sure to segregate your expenses by project if possible. This can make it easier to calculate and document your claims accurately later on when you're filing for the R&D tax credit. Now, to make the most of this credit, you'll need to avoid some of the common pitfalls. So let's take a look at what doesn't qualify and the areas where business owners usually take a wrong turn. The first one is commercial production. Once a product is ready for production, commercial production, further work doesn't generally qualify for the R&D tax credit. You see, R&D is focused on development. So be careful when defining when development ends and the production begins. Up next, routine quality control. Routine testing or quality checks are important, but on finished products, they don't qualify. But testing during the development phase does. You see, it's all about demonstrating the innovation. It's not about routine operations. I get this next one a lot. What about adaptations for specific customers? Well, if you're making minor changes to meet a customer's needs, then that doesn't count. But if the changes involve new technical challenges, you might still qualify. So that's why it's always worth reviewing each project in detail. And social science research. Studies in areas like economics, management, or behavioral science, they don't qualify, I'm sorry. The R&D tax credit is designed to incentivize technical advancements. Oh, and one of the keys to a successful R&D tax credit claim is strong documentation. So let's look at advanced strategies to help you document your R&D work effectively. Now, I don't want to lose any of you here, so I'm just going to say two different terms that sound pretty similar: quantitative documentation and qualitative documentation. Once again, quantitative versus qualitative documentation. Ugh, I know. What are we talking about here? Stay with me. Because the first one, quantitative documentation, we are talking payroll records, invoices, time tracking data. These are essentially the numbers the IRS will be looking for, so make sure it's all accurate. And honestly, it's not a bad idea to categorize employees by projects, simply to streamline the claim process year after year. Now, the second one, qualitative documentation. This is the documentation alongside the numbers. Think the R&D journey itself, meeting notes, prototypes, project summaries, and test results. Showing a clear process here helps solidify your claim. My suggestion is to consider setting up a shared folder or project management system where your team members can document R&D activities in real time. This will make tax season so much easier for everyone. Now, for business owners and investors, the R&D tax credit isn't just a tax break, it's a way to fund growth and innovation every single year. I honestly can't believe more startup businesses and VCs aren't utilizing this tax incentive. I mean, by using the R&D credit to offset taxes, you create more cash flow to put towards future development. For my VCs, encouraging portfolio companies to claim this credit not only increases their financial stability, but it can also delay the need for additional capital, preserving ownership and increasing ROI. For my founders, business owners, startups, think of the R&D credit as an annual resource that helps build value for your business in the long term. It's not just a short-term financial boost by any means. Hopefully you're thinking, wow, the R&D tax credit offers business owners and investors a powerful tool to drive growth, innovation, and obtain financial flexibility year after year. Because honestly, it does. So if you're ready to take the next step, then check out the link down below in the description. And if you found value in this video, drop a comment with any questions, or just let me know what topics you want to see next on this channel.